The brick walls are there for a reason. The brick walls are not there to keep us out. The brick walls are there to give us a chance to show how badly we want something. Because the brick walls are there to stop the people who don't want it badly enough. They're there to stop the other people. Randy Pausch. And what Randy teaches us is what we ask you to commit yourself to every day, breaking down the brick walls. What are the brick walls? Well, for us, it's 10 to 15 minutes a day to learn what the market is all about, to learn the nuances of following trends. That's what we teach. That's what we talk about. And that, my friends, is what works. Practice trade, work hard. Hopefully, you have your weekly market worksheet in front of you. You're getting ready to fill that out as we go through the chart. So those of you who are new are saying, where do I get the weekly market worksheets? PDFs are available every single day in the emails that you get. To subscribe, go sign up at chartingwealth.com. You'll get an email every day. In the show notes, you will see the daily market worksheet, weekly market worksheet, trade worksheets. You can print those out and fill them out as you listen to the show. For our Patreon supporters, go ahead and get your questions in over the weekend along with the stocks and ETFs you want us to help you track for practice trading. We have a live call-in session this next Wednesday, 12:30 Eastern Daylight Time. The instructions are in the emails you receive on how to participate in that call. We want you with us, Patreon supporters. If you're not a Patreon supporter, then become one. Follow the link. Let's jump into the charts. Everything down for the day. It is, again, good to see. That's what we saw happen over the course of the weekly vertical crossover on the S&P 500. It crossed over last Friday, the 25th of September. What did we see this week? We saw an up week, just like we saw when that initial gold crossover occurred. We saw an up week the following week and then a slam down the next week. This week, we'll get to gold in just a minute, but look at where on the S&P 500 price is, sitting right there on the weekly trend line. Just won't close above it, will it? Price percent oscillator heading down, derivative oscillator gaining downward momentum. That's where we are on the weekly. What's happening on the 2-day? Again, stopping right there at the weekly trend line. Looks like it's heading down just a little bit more. And again, price percent oscillator losing down, derivative oscillator losing downward momentum. That's the price percent oscillator. It's heading down a little. But as we watch and see, we have two-day candles heading up, both topping out about the same point, and again stopping there on that weekly trend line. So pay attention to that. As we start the new week, you're going to be really, really watching to see if that up move is over and everything starts to devolve and slam down. If so, good news for that down move continuing. If not, if it blasts through the weekly trend line, not good news for that down move. Now, we look at the half-day chart. What do we see? We see where it peaked back on Thursday morning and then slowing down Thursday afternoon, down it big in the morning, a little bit of a recovery there, down for the day, 0.95%. Price is still above the weekly trend line on the half-day chart. We do see the price percent oscillator heading down a little bit. Derivative oscillator topped back on Wednesday afternoon. So interesting. So keep your eye on the prize. Be ready to see if down moves continue this next week. What about the Qs? Down the most for the day, 2.81%. Big hammer down day. Now, what do we see for the week? Push through the weekly trend line. A green up candle. We can see a wick on top where it lost some of its energy, but look at that price percent oscillator. Even with that green up candle still heading down, derivative oscillator is 2. If you hit your out points, that's totally understandable. You pulled your trade on that. We understand. Keep your eye on the prize. Look at that 2-day chart. Again, hitting somewhere about the same level as far as the candlestick bodies go. And we see the price percent oscillator ever so slightly heading down, was flat. Derivative oscillator losing downward momentum. What's going on with the half-day chart? Again, it peaked this time on Thursday afternoon, down in the morning on Friday. That's where the real hammer down went, and reduced some of that in the afternoon, but still a big down day, 2.81%. Now, those of you who are looking for a potential jumping in point this next week, if the week starts off really cycling down, what might you look for? You can look for a 4-hour crossover going down. We talked about this actually on the S&P last week because it was continuing to move up on that half-day chart. You can always look for a jumping in point when you have that half-day chart head down. Again, it's our weakest reason for going down, but remember, the 2-day and the weekly are in confirmed down moves. So we'll watch, see what there is to see, and learn there. Hope you're filling out your trade worksheets if you are in that trade. By the way, special training for you guys today, the secret of maximizing the Monday effect. What is the Monday effect? It's also called the weekend effect. It is what we see typically, the direction the charts end the week on, particularly in the afternoon on Friday as news trickles in, tends to amplify over the weekend and move in the same direction on Monday, beginning of the week. So we'll see if that Monday effect with all the down energy on Friday in the S&P 500 and the NASDAQ 100 continues at the beginning of the week. I want you to take that training. It's available in your show notes for subscribers. And again, subscribe for free at chartingwealth.com. Get all those special trainings on a daily basis. Now, we go to TLT, 20-year bonds. They're down for the day, 0.37%. It is a down week. We see we have a red spinning top. Prices below the 2-day. That doesn't even make sense. The 2-day trend. We'll look at that in just a minute. How it can get confusing because there was not a lot of move there. We'll look at that. But we see that price is headed down. Derivative oscillator is down, losing downward momentum. Price percent oscillator heading down 2-day. Let's look at that. Oh, I see what we have. We had, remember us talking yesterday about the crossover, asking you if you were going to look for it at the end of the day. How many of you were looking for it and pulled the trigger on the 2-day recross at the end of the day for a down move in 20-year bonds? We spoke about that. I hope some of you played that. What does it cost to practice trade it? Takes some time and some energy and a lot to be learned, particularly if you're filling out your trade worksheet. So we did have a confirmation of a 2-day recross going down. So we'll see how that plays out for you. You know, look at that big sideways slide for many days on TLT. Hopefully that down move will continue. Let's see what's up with the half-day chart. We see down in the morning, that's where it really plumbed its depths and again continued cranking down in the afternoon, but didn't hit the low that it hit in the morning. But look at that price percent oscillator heading down, derivative oscillator too. So that's where we are as far as bonds go. Again, we do have that 2-day recross. Hopefully some of you played that. Now what about gold? Gold was down just a little bit for the day, 0.09%, so not quite 0.9%. Look at that price percent oscillator still moving down. Remember, we had that weekly vertical crossover going down on gold back on the week ending September the 11th. Next week it was up, then gold hammering down last week, and this week as it pulls to a close is a slowdown in that down movement. Solid green candle. It's not a green open box, so it is a down week, but not as hard and heavy as the prior week. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. 2-day chart still going down, but losing some of that energy. We can see that with the 2 up candles, particularly this latest one. But again, that price percent oscillator still heading down. Derivative oscillator still quite negative, but losing a little bit of downward momentum. And we go to the half-day chart. And that's where we see the weakness on Friday after several days of just pushing up movement. So we'll continue to watch and see what we can learn from these charts as we get into the new week. Will things rotate back over, going down, and will you have renewed down movement? Now, while the two-day and the weekly are still in confirmed down moves, when that 4-hour chart crosses back over going down, it gives you an opportunity, not the best of opportunities, but an opportunity to pull the trigger on another down play. If you had pulled the trigger and gotten out of gold, taken your profits in those down moves, you may have done that. Again, just continue to watch, see what there is. And I do encourage you to do the shorter chart trades just to see what there is to learn from it. What I believe you'll learn over and over again is they're just not as good as the initial weekly vertical crossovers. But practice trade them. You're only going to learn this by doing it. You're not going to learn it by just listening to my voice. You've got to get out there and participate in the practice trading. And again, like I said, to start this entire training off today using Randy Pausch's quote, "Those brick walls are there for a reason." They're not to keep us out. They're to keep the other people out, the people that won't work and bust through them. You're that person that's going to do the work. Commit yourself to it. Every day, 10 to 15 minutes, that's all we ask. Don't forget our book is available. An autographed copy is sitting right here in the Charting Wealth offices waiting for you. Follow the link in the show notes. Buy it. Supercharge your training. And of course, fill out those weekly market worksheets once a week, daily market worksheets every day. You will see how helpful they are when you start using them. Commit to it today. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.